We're good. Well, Andrew, welcome.
Hello. What a crazy day.
It is. It's definitely been a crazy week. As I said, I'm really excited for the earnings season to be back. So we're giving this a try. We're going to call this segment probably like a closing bell from our peak capital trading office, something like that. We're still coming up with a name. Hopefully you enjoy. We're going to kind of recap what happened in the market, the earnings. We're going to get into nuts and bolts of the earnings, the stuff that is coming out. Lots of trading talk, lots of market talk, and with the man himself, Andrew. Andrew, what's happening?
That's great. It was a crazy trading date.
What are you watching right now? You're watching Tesla's earning, right?
I'm watching right now Tesla. It doesn't get a lot of volume, but the volatility is really high on it. It was minus 5%. Now it's up, went up like $20, $30 up and down.
Yeah, go ahead.
But it doesn't get any volume right now, so that must be a reason. Yeah.
I think the real action, the problem with Tesla is, and Brian called me before, and he's like, "Are you gonna play with options?" Is they set their delivery numbers out end of the quarter, so the surprise is already out. So that it doesn't move as much unless like Musk says something crazy, like they're gonna increase prices or something like that. Like Tesla usually doesn't move.
So no guidance. They probably didn't say any guidance. I'm trying to find if there is any news on it or not. So I'm in tradingterminal.com and see if there is any breaking news coming from their earnings.
Yeah, let me go out there.
Because one of the things that really destroyed Netflix was the guidance. They said, we lost 200,000, but get ready, we're going to lose another $2 million in this quarter, 2 million subscribers. So that's the one that really got it destroyed. Yeah, I'm trying to see.
Yeah, so the news are coming out right now. If you can see my screen for people watching this live. So Tesla is achieving 50% CAGR in their vehicle delivery over multi-years horizon, which is pretty good. So that's a good news. Tesla says making progress on Cybertruck. So still no news on the Cybertruck. Model Y ramp up. So news are coming out. We already knew the delivery number was 310,000, so that's not really a surprise. Very interesting.
Yeah, I mean the volume is definitely very thin on that, and definitely. One thing, Ardi, that was very interesting was Meta, Facebook.
Yeah.
What happened to Facebook or Meta platforms? It got destroyed today at 7.5% right now.
Yeah, I think it was a little bit of it was also, I would say, kind of a sympathy play. I mean, XLC, that's the communication sector, is not having a good time. And I think Netflix is in there as well. Meta is definitely in there. So you can see this XLC, this sector is not doing good. With Facebook being 18% of it, and Netflix being about 5% of it. So another massacre day, and then the trend is definitely clearly to the downside, right? And no sign of any kind of relief.
Yeah, awesome.
Facebook, I think, got earning coming. Let me go ahead and take a look at our calendar. This is, by the way, our trading terminal. So it is absolutely free. It's made by traders, people that you see in the background of Andrew. There's some of our developers working on this, so definitely check it out, tradingterminal.com. Just open a profile, it's free, and then you get access to all this data. Facebook, is it this week or? No, it's next week, next Wednesday. It will definitely be interesting. Andrew, let's go to the agenda of the stuff we want to talk about. What do you think?
For the next week?
No, for today, for this session.
So for this session, well, let's talk about. I was really hoping to get some volatility on Tesla. We didn't get any volatility on Tesla.
Are you trading it right
now?
No,
no, I'm not.
So I was thinking about let's kind of do a deep dive in Netflix earning together. I did some research, some interesting stuff came up. I'm pretty sure you have a lot of interesting stuff to say as well. And the upcoming earning this week, and then a market recap and what's happening in the bond market.
Yeah, that's excellent.
What do you think? Sounds good?
Yeah, that sounds excellent. Let's do it.
So you traded Netflix today. You shorted it.
I did, yeah.
It was pretty awesome.
Yeah, so 1 minute opening range breakdown, which is my bread and butter strategy. at minute number 3. So we sold off, popped up, the pop didn't hold, and then we short the hell out of it, and it dropped really, really hard. I did try to catch the bounce on it, and it was a little bit immature, and it was really, really a mistake. And I survived that, but definitely it was a really good bounce day there. After, as soon as I got out of it, really nice bounce happened, which you exactly got that put short on that. That was really amazing.
Literally got the bottom. So I didn't have any trades open for the day, so I came a little later because I didn't have any open trades. I came in, sat behind my desk, obviously saw Netflix as a continued sell-off, opened up the option chain and looked at some of the premiums. And they're very insane. So they're too good to be true. I've always talked about, selling puts. You want to sell puts when there's fear in the market because you're selling it to people who are seeking protection, right? Because put is a protection against downside. So when things are really panicky, you don't want to be a put buyer. You actually want to be a put seller. So you want to take advantage of that. That's exactly what I did. Made some decent money, but you have to be looking into these things. So it worked out great.
That's something that, Adi, you mentioned really, really nice. When the market is dropping or Netflix is collapsing like that, everyone who's panicking or hedging and trying to buy the puts. That's why the premiums are so expensive.
Yeah.
That happened to me when the market was dropping in January. I wanted to hedge my TNA, and I had to pay for $60 put. I have to pay $15 premium. That's crazy.
That is
because I was in the desperate, and I had to pay that.
Yeah.
So the person who actually sells the put, they're in at the advantage.
Yeah.
And what the risk is, they have to cover. So
Yeah.
if they have that, so if I know for you it was a cash secured, so you had the cash enough to sell the put.
Yeah, I sold 6 contracts, so I was like, worst case scenario, I'll sit on 600 shares of Netflix. And at 190, it's doable, and that's kind of what I want to get into. I market bodied Netflix, but there were some good stuff. So I think, Andrew, they're getting into a new business model. They wanna try a new business model, and that's kind of their ad revenue. They want to have a cheaper version where you would see ad. And I was doing some readings, and this came up. One of the analysts said something really interesting. So Hulu generated over $3 billion in ad revenue last year. Hulu's business model is freemium premium. You watch the free version, you watch the ads, you can upgrade to premium. So with about 88% of subscribers choosing an ad-supported plan, Michael Morris is the name of the analyst, and he basically estimated that this kind of creating an ad version of Netflix could add another $4 billion to profits for Netflix by 2030. So it's a new business model. There's a lot of uncertainty, but it's not all bad news. I think Netflix is no longer a growth company. It has peaked that growth, so it's probably either going to decline or it's going to be in the mature state. So they have to look at creative ways to generate cash flow. They're still a cash flow machine. They had, this quarter alone, they had $802 million in free cash flow. So they're still generating cash like no other business. They can invest it back into content, but I think it's still a solid business.
That's amazing, yeah. So first of all, I was really, really surprised that Netflix didn't crack down this password sharing way, way earlier. And it eventually caught up with them. And now they're saying that they're trying to crack down this password sharing. That's definitely 100% something that they should have done. Another thing that you mentioned is about the ad revenue. That's also something that is interesting, although originally Netflix started as something that pay a fee, don't worry about it, but if you have to, you have to do that. Another thing that Netflix I think can potentially do is bring the content creators into that, like a Spotify or like YouTube. They don't create content, they bring the content creators and share the revenue with them. There's a lot of big YouTubers that they're putting very amazing content. Why not they have a channel on YouTube, on Netflix, and they have the content over there, and per view they can get paid.
Yeah, that's a great idea. And so another person was talking about kind of like some kind of an NFT collaboration inside Netflix. So have these NFTs of certain shows and then resale values, things like that. There's tons of stuff, so people are getting creative.
Yeah, exactly.
We know Ackman's having a terrible day, right?
He's down probably $300 million right now.
Yeah, I did some back of the envelope math, and it was like around 260 million because he bought 3.1 million shares when it was around $320-$30. So about $1 billion position, down 25% on $1 billion. Do the math, it will be about 250 million. So.
Definitely not happy. Do you think in that position he's hedged?
That's a tough one because it
Do you have enough option contracts
yeah, it would be very difficult. I mean, these you have to kind of have a longer term horizon. It's difficult. He probably could have some kind of a hedge, maybe shorting XLC in case something goes bad or something more creative, but just buying outright puts, I think it would be really hard.
Yeah, that contract is definitely show up in everyone's radar. And and who wants to open that position for him? That's another thing.
Yeah, exactly.
The market makers who want to open that position, they have to be able to hedge that position for
hedge
him.
That position. And that was one of the things we were talking about, volatility hedging today, right? When you've sold so much puts, you're synthetically long a stock, right?
Exactly.
So now you gotta sell Netflix to be hedged. Right?
Yeah.
So it's.
Jared talks a lot about this stuff, especially in the morning session and the volatility. Jared talks about that, and for those of you who are not part of the community in the morning, Jared talks a lot about, especially in the volatile days like this. Jared talks about this volatility hedge.
Andrew, I can't see the chat. Any interesting questions that's come up or anything we should address?
No, not now. I mean, so far, if there's any question in the chat, you should definitely ask it. And we're trying this new format and see how it goes. And definitely a lot of learning for me as well.
So here's Andrew, a really cool thing. I did some research. This is from their file. So this is a letter to the shareholders from Netflix. For those of you who can see my screen. So basically, they're saying, hey, here's our 3 reasons why we're kind of messing up. Number 1 is, growth is slowing down. So first, it's increasingly clear that pace of growth is slowing down, which everyone expected, right? They can't reach 1 billion subscribers. That's completely okay. Then the second thing is, I think that's kind of the business model of talking. At 222 million, 100 million people are sharing passwords. So
they know that.
They know that, and it's very interesting how it's the second thing. So they're kind of blaming that password sharing. It doesn't really look good on a management when they say, "Oops, people are sharing password. That's why we're not generating enough." And then third thing is competition, and they provided this chart, and this is really interesting, especially because of the thing that you said. 5.7% market share is YouTube, and YouTube is free. So now if Netflix actually aggressively target those content creators, maybe bring them to the platform, that could eat up some of the market share out of YouTube. That could create some new kind of revenue and new users into the Netflix. So that would be interesting.
100%. I think that bringing the content creators into Netflix have a huge impact. YouTube is fun. In the evening sometimes I try to go to YouTube, but it's a little bit messy. The ad pops up. The suggestion comes up. Netflix has always been a very streamlined platform for me to work. And if I know, okay, I'm going to go to Joe Rogan channel, I'm going to go to this guy channel and see what he has. So exactly like a Spotify. Then I think that's a really, really good model that they should go toward that. And YouTube is essentially the only thing that they're providing is just free, the cloud services, and the content creators do everything for them.
Yeah. Another interesting thing was, of course, I think we're going to see this in every company. The fourth reason is macro factors, sluggish economic growth. So look at these type of wars when you're thinking about setting up trades, maybe swing trades, maybe position trades over the next 6 months. Really read these letters. They're super simply written. So anybody can, you don't have to have a background in the market or finance. You can really understand them. This word is sluggish economic growth. So probably a lot more people are gonna, talk about, economy slowing down, and of course the macro environment, which is the war in Europe. So.
I know they have about, there are a lot of people in Russia that they canceled. But I don't know how the impact of that would be on that. But I don't know. I mean, you can blame the macroeconomics and inflation, but has anyone ever canceled their Netflix because of the inflation yet? I mean, I might cut my coffee and I have one a day, $4 at Starbucks. But I think Netflix is still one of those things that I would cancel right at the last minute because it's my entertainment.
Yeah, but you got. I guess then the question is your competition. Like, are you gonna pay $5 to Apple TV Plus, another $9 to Disney Plus, another now what, $19.99 to Netflix?
Netflix, yeah.
So it all comes down to surfing these services. So be 1 month with Netflix, a really good show comes on that Disney Plus, switch to Disney Plus. So
yeah, exactly. That's the point. There was a study that Americans are how many streaming services they're willing to pay, and the majority of the answers was maximum 3. It's around that number. But right now it's almost 6 that they have to pay. If there's Hulu, there's Crave TV, there's Disney Plus, and there's Apple TV, and then there's Amazon Prime, and then there's Netflix. There's a little bit getting too many, and then people start streaming down.
Yeah. It definitely interesting. Again, I think it's still Netflix. And another analysis that I saw that was really interesting, Andrew, I think it was an analyst said, hey, let's say they lose 50 million subscribers, but if they're increasing the price, we still don't know that. We haven't done that analysis of saying, hey, maybe their bottom line is going to improve actually. So yes, maybe they're losing subscribers, but if they're raising the price overall, like the contribution margin, overall it's going to actually benefit their net income at the end of the day. And that's going to be good for
I'm sure there is some sort of optimum somewhere that they have to find,
Yeah, so it would be, that's an interesting thing to watch.
It's a hard business. I mean, as you mentioned, Netflix, this drop, even though it's only 200,000, it shows that how much people are betting on the future growth of Netflix.
Yeah.
And if Netflix doesn't become a growth company and goes into a mid-age crisis, like many of these big companies, like Google has been in mid-age crisis for many, many years until it really broke out of that, then investors have to be really, really patient. They don't pay dividends, do they?
No, but I think they recently, a couple of years ago, they introduced share buyback. So they're going to start buying back shares. That's good usually for the businesses. Another really interesting research was done that you would think, like on paper, companies would do share buybacks when their stock is cheap because they're like, oh, our stock is cheap, so we buy it back. But share buybacks actually happens when stock is expensive. It looked at the trends. Like Starbucks recently canceled their share buyback plan.
Why?
Even though their stock is very down, because they want to kind of focus on operation. There's a lot of headwinds with unionization going on. Like a lot of union stores are becoming union, so that's putting pressure on them. So they're like, we need this spare cash to kind of weather this storm if we need to raise wages and things like
Interesting, yeah. I know Disney used to pay dividend. I don't know if they're still doing that or not. And one of the big institutional investors who actually took a position and take a board seat, and they said, why are you paying dividend? Instead, just focus that money, like billions of dollars in dividend, just put it into the content and push the price back. The capital gain would be the advantage for investors, not the dividend. But I guess that's also a very, very hard decision for the investors and management.
Yeah, that's a tough one. I know Disney canceled their dividend. I don't know if it's back, but they did cancel, exactly, like the story you said. Any last thoughts on Netflix? I mean, I read this overall. I mean, I think anytime in the market there is uncertainty about future of a company, a new business model is being tried out, the market reacts poorly because it's uncertainty. We saw it in Facebook, Meta, right? They're going into metaverse. We don't know what's going to happen. The stock sold off. But
Meta is a huge gamble for Mark Zuckerberg.
Yeah.
I mean, every quarter their LifeLab division, which they're working on metaverse, they're losing like $10 billion a quarter or something. That was a crazy number, and that is a huge shift. And Zuckerberg is a very smart person, and he's always ahead of his game. If he can shift everyone to metaverse, this meeting would be happening in metaverse instead of in the real life.
Yeah.
And it's a big shift to go toward that. But yeah, I'm not surprised that nobody wants to touch Facebook right now, because it's just this crazy shift that he's doing. He wants to be the first, and usually the people who are the first, they're not surviving.
So SPY closed flat today. Nasdaq down 1.5%. Dow slightly up. IWM surprisingly resilient in the past few weeks. Sectors, same old story. Nothing has really changed. Real estate, staple, healthcare, these are all defensive names, are stronger. And then earnings, how's Tesla doing? Did it move at all, or?
Tesla, I am looking at it, and no, it's down 2%. There's no volume, so I don't really trust any of this volatility.
It's probably, I think maybe the call is in 30 minutes or something, and then if Elon Musk says something crazy.
Oh, so they haven't released anything. I thought that they already released the transcripts. Because apparently, algos read this transcript, and
Yeah.
a lot of decisions are going to happen
Yeah.
as these algos just quickly read these statements.
Yeah.
Like even for Feds, when they release their statements, you see in a matter of seconds that trades are happening. It's probably all algo trading that they read and find the sentiment and they make a decision,
Yeah.
which is kind of crazy.
It is crazy. I would never have my money managed by algo unless it's a good algo,
Yeah.
not a terrible algo. Interactive Broker had earnings. IB had earnings today. I didn't know that.
Interactive Brokers, IBKR. Let's
Yeah.
see what the IB did. It's my favorite broker, up 1%.
How did they do yesterday? The
That's
earning was
actually not
yesterday.
1%. Try to see what's the change percentage on that.
I mean, I can go here.
Yeah, IB is up 2% actually. That's very interesting. 1.5%. Very nice. IB had a good day. So Jared said something in the YouTube chat that he said that it's good to quantify how far outside of the expected move of Netflix today we had. 3.5 times from the $40 move, which
Yeah.
is statistically very rare. I mean,
No, yeah, that's true, right? We had basically more than 3 standard deviation away. So with 3 standard deviation is 99.7%, right?
Yeah.
So the probability of it happening is 0.003. Like before, without getting too geeky in here, it's very rare.
yeah, definitely.
It's insane. Yeah. Yeah. So I got nothing more. Tomorrow we're recording after hours with traders. Brian's coming in.
CVNA, by the way, Ed is trading CVNA. Someone mentioned that in the chat room. CVNA, Ed is trading it in his chat room.
What is
He's
CVNA?
probably short from $90 goes up to $70. I don't know what CVNA it really is. What is this company?
Carvana.
Carvana.
Let's take a look. Subsidiary operate e-commerce platform for buying and sell. Oh, Carvana. Yeah. Isn't it a platform Ed usually talks about on his Twitter account?
Possibly.
He loves it. It's like, I bought a car from them. It was so, and now he's shorting it.
Oh, really?
That's-
Well, they had a really bad earning. They're down 27%. That's definitely would have been an amazing short at $92, $93, all the way now to $70.
You know what, Andrew? I think this is very interesting. Let's look at the earnings of this company, and they're a platform for buying and selling used cars, and we know the used car had a huge drop in prices. So I'm sure that has something to do with that.
Yeah, it's in a downtrend. It has been in a downtrend in the last year or so. I mean, it peaked up $380 back in August last year.
Yeah.
And now it's at $73. So, yeah, even the inflation thing didn't really work then because the used cars probably, had a really good time last year. But apparently,
Here's a good bet, educated bet. I think this going into this earnings season is anytime go to our trading terminal, look up the company that has earning, go to their page. If their sector is consumer cyclical, buy some puts. I'm pretty sure 9, maybe 7 out of 10 times you're gonna make money.
That's really easy money, I guess, probably.
Yeah, it's definitely interesting. Look at the analyst rating on this. A strong buy. Man, they are missing.
These analysts are always late. I don't know if you can make any decision based on these analyst ratings.
Yeah, definitely. It's insane.
So what else people are trading? I know. So thanks for Ragnarok, who mentioned that Ed is killing it in the chat room. Maybe I should log into the chat room and see what he's doing too.
Definitely. Maybe I'll open up a YouTube chat. Actually, if I do open up, it's gonna kind of mirror into the screen, so it'll get all messy.
So is there any big? When is Apple earning?
They're all next week.
They're next week, yeah.
So next week we have a packed week in terms of earning, which is the last week of April. Google, Microsoft, Visa. Again, Visa, another consumer cyclical. Starbucks, another consumer cyclical. So A lot of those heavy hitters are coming in. Pepsi, Coke, these guys are staple names, so they are near all-time high. So this is very interesting. Facebook, Pepsi. Yeah. Ford is coming. Brian's beloved Ford is.
Yeah, Brian has
reporting.
trading long Ford. I don't think he's still long though.
No, I think he's selling premium on Ford. He got some $14 puts, so I think he's okay. He's doing good. Yeah, lots of action. Let us know, how do you like this format? We're thinking about maybe doing 2-3 days a week, especially when there's big events and big news happening in the market. Coming on live, especially interacting with you guys. And yeah, that's about it.
Yeah, John, how are you? How was your day, John? Did you have a good day? So Adi, what else do you want to talk? Do you want to talk about the interest rates and treasuries?
Sure, yeah, we could talk about that as well. Tesla revenue grew 81% from last year. I'm just looking at the news. Nothing. Oh, how did Alcoa do?
Alcoa is AA.
Yeah, AA.
It's down 5% right now.
Down 5%?
Yeah, the earning came in. It's down 5%.
That's interesting, because this was one of those commodity names that was on a huge, massive run.
Yeah.
It's
aluminum, yeah.
Yeah, aluminum, yeah. Basic material, aluminum, and yeah, it's down right now.
I mean, it wasn't a crazy drop, because today it sold off all the way up to 83, and now it's trading at 83 after the earnings. So I mean, it's just essentially trading at the low of the day. So earnings probably didn't do anything crazy.
Yeah.
Tesla is still at minus 1.4%. So get some of the gains back. It was down 5% during the day. Now it's at $1,000.15 per share.
Yeah, I mean, with treasuries, I mean, we've been talking about TLT and a 10-year a lot. This was a really popular trade for a lot of traders. They were shorting the 10-year, shorting the 20-year, and the reason was really clear, right? The reason was Fed's going to increase the rates. That's going to put kind of a downward pressure on the bond market. So they were selling, they were kind of shorting the treasury. So a clear downtrend. But then as the inflation numbers was coming out, especially the used car sales numbers, things like that, it seems like, okay, inflation might be slowly easing, and this shorting the treasury play might be kind of overdone. I've been talking about it, especially in my newsletter on Monday, a couple of days ago, where I sent out, I said, this could be a really profitable trade going into next week, because we're getting really close to a bottom. We just saw an inflow into treasuries last week, so we might see kind of a short squeeze in here as well. And I was pretty on spot. I think I was off maybe one day, but we saw this candlestick over here bottoming, and it had a really strong day. It might push higher, it might not. I've sold some premium at 119 or 118 on TLT, so it'll be interesting. I think one of the things I'm watching.
IWM was the only sector that actually closed green, I think. What about the Dow Jones?
I think Dow was green as well.
Dow was green as well. Yeah, Dow was green 0.7%. IWM was up 0.4%.
And SPY kind of closed flat.
Yeah, I think Netflix and Facebook took down the whole SPY with them down probably.
Definitely, yeah, I think so.
So exciting time. So tomorrow definitely we are going to have CVNA, Carvana, which is definitely is going to be in play, down 28%, and it's kind of recovering a little bit. Tesla probably not. I mean, Tesla is always tradable, always in play. It's tradable. I'm not sure if it's really in play or not, but it has a really good order flow. We're going to keep that. Meta, definitely. Netflix is going to be again tradable. I'm sure the continuation is going to happen. I'll put definitely Tesla on my watch, Facebook on my watch, Netflix is going to be on my watch. QQQ definitely, it's a volatile sector these days, and I never really traded X or AA, Alcoa. I never really liked trading these basic materials and industry sectors. They were always trading choppy. I don't know why. For at least for day trading, they were really bad.
Yeah, probably a lot of algos trading them. Not a lot.
So, Adi, Joseph is asking a question about the day trading taxes, and if you make $100,000 a year, and you know, but you end up the year only $50,000, are you taxed on the 50K? So I'm not sure about the question, but you're always taxed on the profit that you're making, you know, not on the losses. So if you make the net over the years $50,000, you're going to tax on that $50,000. But how you're going to tax really depends on which country and which jurisdiction you're living and how you set up your structure. If you're a structure that it is a capital gain, then the capital gain is taxed differently than the business income. And the losses are also treated differently. So the capital gain loss can only be write-off with capital gain. So if you're buying a house goes up, you're losing trading, then these two can be write-off. But for me, for example, because I'm a day trader, highly active trader, for my gains are business. So my corporations get taxed as a business income because I'm just the, but that's how the Canada and the BC and the, you know, British Columbia works. So it really depends. You know, you can't just give one answer to everybody. So it's really important to talk to your accountant and structure it in a way that is the most efficient for you to in terms of taxes.
Exactly. I remember when you send your document to your tax accountant, and it said it's like what 500 pages or something.
More than that, it was like so. My accountant asked for all of my trades, and it was like 1,500 pages of summary of all the trades.
Crazy, yeah.
And then I asked her, okay, why don't you just put this way, so I can, you know, tax lower? And then she said, well, how do you explain to Canada Revenue Agency that this is a capital gain? You know, 1,500 pages of trade summary. So definitely it's an issue.
Yeah. Yeah, definitely seek out a kind of a tax advice. You know, maybe a CPA or some kind of a tax expert for that. So yeah.
Awesome. So right now, again, nothing crazy is happening, and then in the market, we are still looking at potential. So the Peak Capital Bootcamp, guys, if it's opening, if you are interested in helping your trade book, importance of trade book. Again, I'm saying this again. Netflix today, I tried to catch a reversal, and I was not successful. But can I say that trading is hard, or what was it? No, the problem is I didn't have any trade book. Why do you buy Netflix in such a downtrend? Having a trade book means having a strategy, and not only a strategy, but the perfect execution of that strategy. The Peak Capital Bootcamp is all about that. We're gonna work on building a trade book for you. And you know, let me also say that the perfect example today was whenever you have a trade book, you're a good trader, you make these mistakes, and that's the psychology. Like today, for example, I think I'm a good trader, but I make this mistake of trading something out of just boredom or excitement or FOMO. So having a trade book doesn't necessarily make you a great trader. So if you're coming to the bootcamp, build a trade book. Now executing and sticking to that trade book is also a very, very big element for your trading success.
Yeah, well said. And we're almost sold out, I believe.
Almost sold out. I mean, we have I think only 50 people. Norm and Mike are accepting because now they're pairing them with different, captains and co-captains. So we don't want to have a really, really big people in there. And education has been improved in bootcamp a lot in the last couple of days, and the last couple of bootcamps that we had. So I think it's amazing. And if you're new to trading, I think you should start with education, doing a simulator, and then after maybe 3 to 6 months, take the bootcamp. It might be too early for you if you're really, really fresh into day trading.
Yeah, and it is very intense. It's like 3 months of nonstop, time and meetings and all that stuff.
Yeah. Excellent.
Cool.
Well, thank you, Adi. That was awesome. That was our first live. We want to see how it goes. I mean, in the earnings season, there is a lot to discuss, but we'll see. Maybe we go more live and see how it goes, and definitely good at. The Mike is asking about the bootcamp price. You can check the website. It's, I think, $1,500. That includes the simulator and the softwares as well.
Yeah, very nice. How many people are live right now?
So 41 people are watching, and thank you so much for all the support. That's the first one. We were expecting some sort of technical issues. Santiago did an amazing job. And awesome.
Yeah, awesome. Thanks
Thanks,
for
guys, and
tuning in.
have a good day.
See you tomorrow.
And Santiago can tell us when you're off.